Good afternoon, viewers. My name is Imran. I'm a UK and international tax specialist. Once again, I'm here with another interesting video. In this video, I will explain to you what is special rate pool, what expenditure qualifies for special rate pool. This video is with illustration and example, which will make it very easy for you to understand the concept and you can apply the knowledges in exam and in practice. I suggest you watch this video to the end because there are a lot of useful information in this video. Also, do not forget to subscribe to my channel because I will be making more video on corporation tax, inheritance tax, employment taxes, capital gain taxes, financial reporting, financial management, and performance management. This topic is highly tested in ACCA, ACA, and CTA tax exam. It is also helping viewers to understand special rate pool qualifying expenditure. This video is with the illustration which will make it very easy for the viewers to understand the concept. So let's begin. Very important. Special rate pool expenditure incurred on the following to be allocated to special rate pool. So you have to remember this. Integral future will explain in more detail. Thermal insulation of building used in a business. New or second-hand car CO2 emission over 50 gram per kilometer. This rate was 110 gram per kilometer for expenditure on a car incurred before 1st of April 2021 and solar panels. Very important for you to remember, apart from cars, assets that fall into the special rate pools are eligible for Annual Investment Allowance. Very important because in exam you will be tested, in practice you will be constantly asked this question. Any excess expenditure will be placed in a special rate pool where they will be eligible for 6% written down allowance rather than 18%. Remember, if you have seen my other videos on capital allowances, so there are two rates. One is a special rate pool rate, which is 6%. For the main pool rate, the written down allowance is 18%. So you need to remember, therefore, you need to know which expenditure falls in which pool. Most of the expenditure on plant and machinery, sofa, TV, CCTV camera, other plant and machinery that falls in main pool. However, you need to remember what falls in the special rate pools, because if an expenditure qualifies for special rate pool and you add it to the main pool, so you will be wasting your time in exam. In practice, you will receive an investigation from HMRC or your tax return will be wrong. So therefore, you need to know which expenditure qualifies for special rate pool. So if expenditure qualifies for special rate pool, so make sure you use the AIA against the special rate pool expenditure, because the special rate pool expenditure attracts only 6% of written down allowance. Because there is lower written down allowance, your aim is to create tax savings for your clients. So make sure you allocate AIA efficiently against special rate pool expenditure, and then the remaining AIA you can use against main pool item, because the main pool item attract a capital allowance of 18%. So remember, if you have seen my previous video, so what is capital allowance? Why we deduct capital allowance from the trading profit? Because when it's come to corporation tax, you add back depreciation and then claim capital allowances. So what is depreciation? So when we buy plant and machinery, we add this plant and machinery in the balance sheet, or we capitalize those plant and machinery in the balance sheet, and then we depreciate those plant and machinery based on their useful life. So some plant will be having useful life of 3 years, some plant will have 4 years, some plants will have 5 years, some could have 10 years, 25 years. So obviously there will be different depreciation rate. However, when it's come to corporation tax, so the legislation states that because depreciation is an accounting term, therefore we adding it back and then we claim capital allowances. Remember, not every expenditure on fixed asset qualifies for capital allowance purpose. For example, building does not qualify. Okay, the other doors, shutters, they do not qualify. Windows, they do not qualify. Floors, they do not qualify. Walls and ceilings, they do not qualify for capital allowances. However, In financial reporting, you have studied that all these fixed assets are added to the balance sheet, and we depreciating most of the asset apart from the land. So therefore, the depreciation, when it comes to corporation tax, you add back this depreciation, and instead then you look at this expenditure if that qualifies for capital allowance purpose. If that qualifies for capital allowance purpose, in which pool it will go, either main pool or special rate pool, because the main pool written down allowance is 18%, special rate pool is 6%. So you need to be very careful. Even in exam, you will be definitely tested, because it's a part of legislation, is a part of the HMRC criteria. So if you don't remember the criteria, and if you just learn how to calculate capital allowances, this is not enough. You need to go a bit beyond this. You need to identify expenses which qualifies for main pool and the expenses that qualify for special rate pool. So make sure you put them in the right column. Make sure you claim the right amount of written down allowance on the expenditure or the qualifying expenditure. So that's the whole purpose of explaining this topic. Let's start with the integral future. Legislation states that assets such as lift and the air conditioning system have a longer economic life than other more productive equipment used in the business. So the special rate pools offer a more appropriate rate of write-off for these assets. Simple, you claim a written down allowance of 6% on those assets based on what has been stated in the UK tax legislation. The expenditure on the following will be added to the special rate pool. Lift, walkways and escalator, they will be added to the special rate pool. Also, they are eligible for AIA. External solar shading, a hot and cold water system, excluding toilet and kitchen facility. So you have to remember these things for your exam. Integral features continue: electric lighting and power system, air conditioning and the air cooling system, space heating systems. So they're all the list you need to remember for your exam, and this will fall in the special rate pool. Also, they are eligible for AIA. Apart from the car, the rest of the special rate pool expenditure qualifies for annual investment allowance. Here is the illustration. So this Josh started trading on 1st of April 2022 and prepared his first set of accounts for 15 months to 30th of June 2023. In his first accounting period to 30th of June, he incurred the following capital expenditure. He bought a factory, air conditioning unit, machinery, energy efficient motor new, energy efficient motors used, new roof on staff canteen, delivery van and installation of lift. So now calculate Josh capital allowances for the period ended to 30th of June 2023. So there are some topics you need to remember. For example, on factory, you cannot claim capital allowances. Also, there's a new roof is not eligible for capital allowances. So then your job is to identify expenses that falls in the special rate pool, or you need to add them to the special rate pool. There are some expenditure that falls in the main pool. Then we need to identify whether we can claim AIA or and first year allowance as well. So I would explain to you on the following slide. Now, based on information, so we have first year allowance because that is the car which is brand new and energy efficient. So the first year allowance is available. Then we have AIA because we can claim AIA on those expenses which are up to 1 million. Main pool, remember the car which is used, although is energy efficient, but it's used, it's not eligible for first year allowance. You cannot claim first year allowance. Also, you cannot claim AIA on the car, so you add it to the main pool based on the CO2 emission, because if it's energy efficient, definitely the CO2 emission is small, less than 50 gram per kilometer. Otherwise, it will not be saying, the examiner will not say that it is energy efficient. Okay, then all the pool item, you add them together. For example, first year pool item, there's only one item, just bring it down 40,000. Then AIA, all the expenses eligible for AIA, just add them up. Main pool item, just bring it down because it's only one item. There's no expenses need to be allocated to special rate pool because majority of the expenses which are related to special rate pool. However, we can claim AIA in priority because it will be more beneficial to claim AIA. It means the bigger the allowance, the less corporation tax the company need to pay or the individual need to pay. So our aim is to utilize the allowances efficiently. As a result, there will be less income tax or corporation tax, because here is, Josh is individual, so he will be paying income tax. Remember, WDA need to be scaled up for 15 months, or 18% multiplied by 15 divided by 12, because on the main pool the rate is 15%. No expenses has been added to special rate pool based on information given to us. So all we need to do is just to lay out an exam, this clean table. It will help you to identify and perform the calculation in much better way. All the allowances you put it on the right hand side, and this just add all the allowances together and deduct those allowances from trading profit, and then work out your income tax, or you have a taxable income. Make sure you write your relevant notes. So expenditure on factory does not qualify for capital allowances. Therefore, the factory value was given to us in the illustration. However, when we start to do calculation, we did not add to any pool. It means the capital allowance is not available on any factory. You just need to make a small notes. Expenditure on air conditioning and lift qualifies as an integral feature. They will be added to special rate pool, hence fall into special rate pool. We will first allocate AIA into integral feature. So our aim is to have a bigger capital allowance. Expenditure on energy efficient car news qualifies for first year allowance 100%. Expenditure on energy efficient car use does not qualify for first year allowance because it is used. Car is not eligible for AIA, hence added to the main pool based on low emission. The new roof is a part of the building and does not qualify for capital allowances. The maximum AIA, because it's 15 months long, however, our expenses are very small, it's for AIA, so therefore no need, because it's all covered by 1 million. 150,000 of AIA is allocated to air conditioning unit and lift. Okay, the remaining AIA is allocated to machinery and delivery van. None of the expenditure is allocated to special rate pool, as 150,000 expenditure on an integral future in the period covered by AIA limit. So it's very easy. Once you have relevant notes, you can get all the full marks in your exam, or it's for you to understand as well. So therefore, these notes would help you to understand the topic. Very important fixture. Remember, we said on building, such as walls, shutters, doors, window, there's walls, ceilings, there's no capital allowance available. However, when it's come to fixture, so a fixture is an asset that is installed or fixed in or to a building such that in law it become a part of that building setting, are eligible for capital allowances. The following may apply, so you need to be very careful. So for fixture, there's a capital allowances available, such as lift and escalator, heating and lighting, an electrical system, boiler and radiator installed in the building, alarm system, sanitary appliances, and hot and cool water system, telephone and data installation. So these are the special rate pool items. So make sure that you know the list. So make sure you do not add it to the main pool. So remember, main pool, majority of machinery that falls in the main pool, such as like sofa, plant and machinery, TV, microwaves, screens. However, but other one with a long life asset, they are added to special rate pool. Now, small plant and machinery pools, sometimes examiner can test you. Very small balances in general pool or special rate pool do not have to calculate written down allowance at 18% or 6% on such pool. You can write off all the balances in your main pool or special rate pool where the pool value is 1,000 or less. After dealing with addition or disposal in the period, the full amount can be written down. So you don't, for example, if the full value left 1,000 or less, you just write it off completely. You don't have to carry forward for the next accounting period. So it's very simple. So start like tax return down value plus deal with addition minus disposal. It's give you value. So figure out if the value is equal to or less than 1000, then WGA is the balance on the food. So it means is just take that balance and deduct from trading profit. It's very simple. I will explain to you with illustration. Now, Tracy, a trader with the tax return down value at 1st of April is 1180. She prepared account to 31st March. Tracy capital allowance for the period ended 31st March 2022 and 23 will be. Remember, Tracy tax return down value is 1180 as 1st of April 2021. So for the accounting period ending 31st March 2022, you claim written down allowance at 18%. Now we have a value left of £968. In the following year, you brought this value down £968. So then you just don't need to do 18%. You just claim the entire amount as written down value and just write it off simply. You just write it off. There's no need for you because the value of 1968 is less than £1,000. So then you just clear up this pool. So just remove that value from the pool and start to deduct from the trading profit. So it's very simple. It means the value is less than 1000, so you don't have to do any more written down allowance. Just write it off this value. Now another illustration, very useful, a lot of useful information. Jerry bought a factory for use in his trade in April 2022. The following expenditure was incurred in the 9 months ended to 31st December 2022. So Jerry kept his accounting period for the 9 months. A workshop of 400,000, installation of air conditioning system 200,000, installation of heating system 100,000, installation of electrical lighting system 100,000, new production machinery 100,000, lift and escalators 400,000. Calculate capital allowances available for 9 months to 31st December 2022, assuming all possible claims for reliefs are made. So Tracy will claim if there's a availability of first year allowance, so you need to think of claiming first year allowance. So we need to identify, is there any expenses eligible for first year allowance? Based on information, there's none. Then you need to start with any information that can we claim annual investment allowance. Yes, we can claim annual investment allowance. Okay, then think of main pool item and the special rate pool item, and also think which expenses you do not need to include in any of the either main pool or special pool, or some of the expenses may not qualify for capital allowance purpose. So we will watch on the following slides. Now remember, there's none of the expenses qualify for first year allowance. Therefore, there's no need for you to create a separate column for first year allowance. You will start with AIAs, general pool, special rate pool, and the allowances column. Then you will start with the, because we don't have any tax return down value brought forward. If there is any, just bring it down. If it related to general pool, so leave it in the general pool side. If it's related to special rate pool, so put it in the special rate pool column. Then you start with the air condition, which is a special rate pool item, because the AIA need to be used against special rate pool item, because the special rate pool allowance is only 6%. So it's more beneficial to allocate AIA against the special rate pool expenses, because this will have much tax saving for individual or a company. As a result, there will be no taxable profit. Then you start with the heating system, lighting system, lift. Remember, the value of the lift was 400,000, but because the accounting period is only 9 months long, so therefore we need to scale down this AIA for the 9 months. So as a result, 1 million AIA will be reduced to 750,000. So we claim AIA up to that limit. So the lift value, original value was 400,000, so we can claim up to 350,000 on that lift. The remaining will be added to the special rate pool item, because the lift and escalator belong to special rate pool. So any value that is not covered by AIA will be added to special rate pool. So then the machinery, the general pool item added to general pool because we already used full AIA. So therefore, no further AIA available. So added to general pool. Add all the pool value together as I did it. So you start with the AIA general pool, because in general pool there's only one item, just bring it down, and the special rate pool item there's only one item, just bring it down. AIA item are you added them because there are 4 items, you just add them together. All you need a calculator, and then obviously if you have the basic mathematics knowledge, plus plus plus, it's very easy. And then you start claim AIA 100%. Then you claim start with the general pool. General pool rate is 18%. Make sure you scale it down for the 9 months, so 9 divided by 12. And the same is with the special rate pool, which is 6%. Make sure you scale it down for the 9 months. And then any value carry forward, just do it this way. In exam, you will not have that much time. However, if you do have time, so kindly perform the calculation in full. So the total capital allowances we claim here is 765,750. This value will be deducted from your trading profit. Also, do not forget to add relevant notes, because that's very important. That notes represent you. It means that you have the knowledges. Sometime by learning exam technique, yes, it would help you, but remember, if you don't have the knowledges and you go for ACCA or ACA or CTA exam, you definitely will fail. So understand the concept, why we're doing such things. So once you have the relevant notes, the examiner understand that you have the knowledges, and that's how the examiner get impressed and give you marks. So the workshop is not eligible for capital allowances. Remember, we didn't add to any pool, so the workshop is not eligible for capital allowances. Air conditioning, heating system, lighting system, escalator are integral feature, a special rate pool item. These expenses are also eligible for AIA. So remember, if you don't know what's integral feature, what is the special rate pool item, and by mistake you add it to the main pool, what will happen is, as a result, you will lose marks, you will waste your time. So therefore, you need to know which item is a special rate pool item, because a special rate pool item will be tested, highly tested, because it needs some explanation. There is a legislation. Main pool item is very obvious. Any plant and machinery, mostly like sofa, TV, general plant and machinery, mobile phone, that are all general, or van, that are general pool items. The special rate pool items that are complicated, you need to remember, because mainly those items which has a longer life, so that will be added to special rate pool. So that's why you get lower capital allowance of 6%. So over the period, most of them have 10 years life, 15 years life. Okay, therefore the legislation introduced a smaller capital allowance for those one. Other plant and machinery have a useful life of 5-6 years, so therefore the 18%. So if you start to claim WDA, a written down allowance at 18%, so eventually in 5 years time you will claim almost 100% of your allowance. So the AIA limit is reduced, scale it down for the 9 months, which is 750,000. We will use AIA in priority against the expenses eligible for special rate pool. The total expenditure on integral future are 800,000. So 750 worth expenditure on integral will receive AIA. The remaining 50,000 will be added to the special rate pool and receive 6% capital allowance. 18% capital allowance is available on the main pool. Remember to scale it down for the 9 months. Capital F is more than 12 months, so make sure you scale it up. Capital allowances for both main pool and special rate pool will be scaled down based on the length of the accounting period. So if you know the rules and regulation, the rest is very easy and you can do very well. Finally, thanks for watching. I hope you found this video useful. It takes me hours to find the useful information from several hundred pages legislation to ensure viewers get the most out of it. Make sure you get most out of it. Remember, once you have the knowledge, the examiner cannot trick you. You will also perform well in practice. Remember, I'm not a tutor, I'm not an examiner. However, I'm a tax and accounting professional. What I'm talking to you from my personal background, from my professional background. Without knowledge, even if you pass your ACCA or you become a qualified chartered accountant, ICW member, you go to any practical field, you will find it very difficult, to perform very well without knowledge. That's why you need to keep studying, keep reading, target legislation. Even an examiner, when it's come to tax, the examiner cannot bring anything from their own head. They will target legislation. Once you have the knowledge, what is a special rate pool item, what is a main pool item, what is a small pool item, what is AIA, and what you can claim AIA, what is the AIA limit, and what is a first year allowance, and how you can claim on first year allowance, and what is the meaning of the capital allowances, and why we adding depreciation back and we deducting capital allowances. The examiner, there's no way that the examiner can trick you. I'm not saying that you will get 100 marks or 90 marks or 80 marks. As long as you pass your exam and then you go to practice. In practice, again, if you don't have the knowledges and experience and you don't study those legislation, for example, in accounting, the examiner will be testing accounting standard. There's no other thing they're expecting from you. For example, in financial management, they would, like our financial management, they will test you the finance knowledge, for example, the investment knowledge. And obviously in performance management, they will be testing you how strong you are on costing and budgeting on that side, because that's the job of performance management. You need to identify the performance. That's your job as a management accountant. So that's your manager or the top senior manager that would be expecting from you. If you go to a tax profession, so they will be expecting from you, because you need to generate the tax savings for them. Make sure that you know how to allocate AIA against which item, how to claim first year allowance, because without this, they would understand that you don't have the knowledges and they would hire someone else. Now, don't forget to share, like, and comments. Maybe it's not useful for you, or maybe it's useful for you, but maybe it's useful for your friends, family member, cousins, and they can get the benefit from this video. Also hit the subscribe button, because I'll be making more useful video like this to benefit you. Now it's time for me to wish you a very good night and happy weekend.